Value added tax VAT. Value added tax is an indirect tax that are charged at various channels of distribution, also called multi-state tax, almost similar to GST. VAT is imposed on additional value or profit made by business. Let's take a look at the slide. How business pays value-added tax to the government. We have got here different column consist of channel of distribution, cost price without VAT, value-added profit, selling price without VAT, VAT percent. This percent might be different from country to country. Selling price with VAT and VAT payable to the government. So we have here different channel of distribution: exporter to importer, importer to dealer, dealer to wholesaler, wholesaler to retailer, and retailer to final consumer. And this column shows the cost price. So in the first stage, exporters to importer is $20,000. This firm has not made any sort of profit or the value added, but he is registered under the VAT. That's why he charged 13%, and this figure is appears here, which is 13% of 20,000 is 2,600. Moving to the next channel of distribution, importer to dealer, 20,000 cost price without VAT, and he made a profit of 6,000. Meaning to say, this is his cost price and he wanted to make a profit 6,000. So the selling price becomes without VAT is 26,000 and VAT is 13% of 26,000 becomes 3,380, and the selling price for this channel of distribution is $29,380. And since this business firm has added value 6,000 bucks, so this firm is liable to pay value added tax to the government, which is $780. Jumping to the next channel of distribution, dealer to wholesaler, 26,000 cost price without VAT. The selling price of previous importer to dealer, this is cost price for the dealer to wholesaler, and this dealer to wholesaler business firm wants to make a profit or top up the value of 13,000, so the selling price without VAT becomes 39,000. This 26,000 plus 13,000 cost plus profit equal to selling price without VAT, and the VAT 13% off this 39,000 becomes 5,070 bucks, and the selling price VAT is this plus this, and the VAT payable to the government for this dealer to wholesaler is 1,619, which is 13% of this, because this is the figure or the value he has added. Going to the next level of channel, wholesaler to retailer. So selling price without VAT from dealer to wholesaler becomes cost price without VAT to the wholesaler to retailer here. This business wanted to make a profit of 7,800, and the selling price without VAT, this plus this becomes 46,800, and the 13% of this 46,800 becomes 6,084, and the selling price with VAT is 52,884. And since this enterprises has made a $7,800 additional value, and 13% of this value becomes $1,014. Similarly, retailer to the final consumer, and the selling price without VAT becomes cost price without VAT to the next channel of distribution, which is here. And these enterprises wanted to make a profit of 4,680, which is 10% of this cost price. Now the selling price becomes 51,480, which is this cost price plus the value added, and the value added 13% of this 51,480 becomes 6,692.4 bucks, and the selling price is 58,172.4 to the final consumer. This is the value from exporter to final consumer, and the retailer has to bear $608.40 to the government. Here, the beginning product price is 20,000, and the ending final consumer has paid 58,172.4. The difference, which is called value added, 31,480, and 13% tax on this value added or additional value is called value added tax. So here, four channel of distributions has made the additional value. This you can see here, which is 31,480, and 13% of this total value would be 4,092.4. If we subtract from this total $6,692.4 to 2,600, the figure comes $4,092.4, which is 13% of this total difference value, or the difference value from final consumer to the beginning price. Thank you very much.